Hi, welcome to Search for Yields, the weekly newsletter from INR Bonds. I'm Arjun Patsati. And with RBI policy coming up for August, that is tomorrow, 5th of August, RBI will let us know what is their policy action. After their MPC commission, which is a monetary policy committee, which sets the policies for the RBI. And they have met for the last couple of days, and they will then let the public know what their policy is for this month. The expectations are that the RBI will raise interest rates in view of the fact that inflation is running high, and high inflation is not good for the economy on the longer run, and can persistent high inflation can create economic instability. The question is that then for investors now is what do they do, and where do they invest, and what bonds to invest in after the policy, and depending on what the RBI guides in the policy and what it has done tomorrow. I'll just take you through the various scenarios and what bonds you can invest in. Financial advisors especially note that it's going to be important to choose the right bonds in such a tricky environment. Just before that, do not forget to download our app QuickInvest by INR Bonds, which gives you a curated list of bonds, which factors in all market environment, as well as issuer-specific issuer-specific fundamentals and other information. And all this is put together in the curated list of bonds with a risk rating of our own, and that gives you a seamless in-app investment process. So that's all you need to do is check the bonds, check what the rating is, check what the yield is, and if it suits your requirement, then you're fine to go ahead and invest through the app. Do not forget to download the app.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Back to Search for Yields. Search for Yields is a weekly newsletter by INR Bonds, which we have been carrying it for the last many couple of years. And in this Search for Yields, we talk about various aspects of the fixed income market and how it will either focus on investors in terms of investments or financial advisors for their clients to position the best investments, fixed income investments for their clients. Now back to RBI policy and what bonds to invest in. The RBI policy will have three broad focuses. One is inflation, the other is the rupee, and the third will be financial market stability. So inflation has been running high, so clearly high inflation is hurting both consumers and savers. Consumers have less money to spend, and savers are seeing the capital come down, savings fall because of the lower value of the currency, because of inflation eating away the currency value. And high inflation is a tax on both the savers and the consumers, and coupled with regular taxes itself, then everything put together, the whole investment and savings equation in the economy can come down, which is not good. So RBI clearly has to be on top of inflation. Not that they can control the inflation on their own, but they have to make sure that they are compensating both consumers and savers for the high inflation. The second is the rupee. The rupee has fallen very sharply, and further depreciation of the rupee will cause further inflation because of import cost of goods turn higher. We already had trade deficit at record highs, and if rupee is weakening further, then there'll be more inflation and bigger tax on investors and savers and consumers. And RBI will have a tougher time controlling inflation. And the third is the financial market stability. So with high risk globally in terms of very high inflation in developed economies, geopolitical issues with a lot of uh, with the Russia-Ukraine crisis hurting all the hurting global markets and capital flows. India has also seen its fair share of volatility. Equities have come down, interest rates have gone up, bond yields have gone up. So basically, savers and investors have lost a lot of money in this instability. And RBI has to make sure that the markets are stable enough. So the rate hikes are given, and given this scenario, which is not going to go away in a hurry, RBI is going to hike rates more. But even then, if the question is, will RBI hike rates fast enough? If they do it slow, then bond investors have a problem because they don't know when to invest. We don't know where the markets will go and where, for example, the 10-year G-Sec yield will stabilize. So there'll still be a lot of uncertainty if they go slow on rate hikes. So if they're going slow on rate hikes and a lot of uncertainty continues, investors are best off buying very, very short tenor bonds, choosing bonds that can give reasonable rates of return with low to moderate risk. Right? It's not a time to take any kind of high risk investments. If RBI hikes rates, front loads it and hike rates very sharply, and then says that they will wait for more data to take further policy actions, and there could be stability in interest rates for a while, then investors can actually take a longer term investment call and maybe invest in a medium term kind of duration bonds and wait for other things to stabilize before looking into get into longer tenor bonds. Still very better to avoid risk even if rate hikes are very sharp. So a ladder kind of a portfolio with 1, 2, 3 or 1, 3 and 5 to 10-year kind of maturity bonds will give the investors a good step in, because 1 year the short tenor bonds on maturity will be able to reinvest at higher levels of yields or in a more stable environment. So the weights on these can be decided by the investor and the financial advisor. And INR bonds has been instrumental in recommending ladder portfolios for financial advisors and investors. Largely, and the ladders portfolios have been working very well, those who have actually adopted the strategy. And so hence, and if the RBI is not hiking rates, then there's further uncertainty and there'll be more volatility. And if this happens, then investors are better to stay very, very safe and not take any kind of risk at all. That's where it is. And wait for the RBI policy tomorrow. INR bonds, as usual, will cover all the policy details and wait for our input to our channels, Bond Bites, and other various channels, including our research and YouTube podcasts and videos. Thank you very much for listening in. Do not forget to subscribe to our YouTube channel if you're not done so already.